You're watching Storm Stock Solutions. I'm Grant Mercer, and we're coming to you mid-session with a fresh read on the tape and the macro currents swirling underneath it. Let's bring some clarity to the chaos in today's markets. We're just past the middle of the trading day, and two forces are grabbing traders' attention. Turbulence in the US dollar that's bleeding into Treasurys, and some very stock-specific fireworks in media, airlines, and the EV and AI space. According to reporting from MarketWatch, the once mighty dollar is having another choppy session, and that weakness versus major currencies is starting to filter into the $30 trillion Treasury market. When the dollar wobbles, it forces global investors to rethink how they're hedged in US bonds, and you can see that an intraday moves along the curve. Professionals are watching whether this becomes more than noise. A persistently weaker dollar can be a tailwind for US multinationals and commodities, but it can also inject volatility into rates markets, which in turn drives equity risk appetites. So into the afternoon, that FX Treasury linkage is one of the key macro gears turning in the background. On the micro side, there are some sharp stock-specific swings. In media and streaming, Comcast's NBC unit is back in the spotlight. MarketWatch highlights that Peacock booked about a $552 million adjusted EBITDA loss in the fourth quarter, largely tied to the heavy costs of big-ticket sports rights like the NBA, even as NBC lines up the Super Bowl and major NBA coverage. The question on the street: are these marquee events and subscriber growth worth the ongoing cash burn? For traders, this is a reminder that the streaming wars remain an area to handle with care. Headline rights deals don't always translate into near-term profitability, and sentiment can turn quickly in that corner of the communications services sector. In terms of what's surprising to the upside, Southwest Airlines is stealing the show. A piece by Claudia Assis notes that the stock is on track for its best day in about 17 years as Wall Street cheers signs that the carrier's transformation plan is finally taking hold. For airline and broader travel watchers, this is an important under-the-radar development. If investors start to believe that operational changes and cost discipline are real, it could shift the narrative not just for Southwest, but for select names across the carriers as earnings season rolls on. I'd put this firmly in the story that could matter more if the follow-through holds category. Another name on the watch list, Tesla. Reporting from William Gavin breaks down why Elon Musk's decision to kill off the Model S and Model X may be less about walking away from cars and more about redeploying prime factory real estate. One analyst cited in that piece suggests Tesla could ultimately generate as much as $25 billion a year by producing Optimus humanoid robots on those former auto lines. Now, that's a long-dated, highly debated story, but it shows you where some of the speculative capital is focused, beyond EVs and into robotics and automation. Traders are watching to see whether this narrative gives the stock any renewed momentum, or if it's viewed as a distraction from the core auto business. Staying in the tech lane, MarketWatch also notes that NVIDIA has lagged the broader chip sector so far this year after an almost relentless run. Morgan Stanley, though, is pushing back on some of the more bearish chatter, suggesting that certain concerns may be overblown. For AI-exposed semiconductors, the key question into the afternoon is whether dip buyers view this stretch as consolidation within a longer-term uptrend, or the start of a more meaningful rotation away from the most crowded winners. Stepping back to Washington, there is a slow burn macro risk that's starting to creep into desks' conversations. The possibility of a partial U.S. government shutdown as soon as this weekend. As Robert Schroeder reports, Senate Democrats are threatening to hold up funding for the Department of Homeland Security, which would make this episode different in scope from the last major shutdown. Markets typically look through short, partial interruptions. But the closer we get to the deadline, the more you could see headlines nudging volatility higher, especially in rates and defense-linked areas. Investors will be watching whether this remains a political skirmish or turns into something that affects data releases, federal pay, or broader sentiment. As we head into the next hour, I'm watching three things: whether dollar pressure keeps distorting the Treasury curve, how long the pop in Southwest can hold before profit-taking shows up, and whether that streaming sports cost story at Comcast sparks a broader rethink in media names tied to expensive live sports rights. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets. On behalf of Storm Stock Solutions, I'm Grant Mercer.